Welcome everybody to today's edition of Toggle's Daily Video Insights. My name is Jan. I'm the CEO and co-founder of Toggle, and today the focus is going to be on Costco. As many of you know, we do a daily review of a particular insight that Toggle selects every morning. So if you'd like to see more of these, just sign up to or subscribe to our YouTube channel, or you can also check out and sign up for our daily brief on toggle.global. The reason why we're going to look at Costco today is that after quite a number of bearish signals that you can see here on Costco, with this one exception where it did actually quite nicely catch this turn, this is really the first positive sign of price pressure that Toggle has identified at quite some time, and it's actually of technical nature. So we're going to take a look at that. If you, in the overview, whenever you're faced with this page, if you click on this, it's going to take you straight to the actual insight behind it. And in this particular case, what Toggle is highlighting is that the 12-week over 26-week price MACD, so again, this really is more for the technical analysis aficionados, but this particular indicator seems to have done quite well for this stock, and it's now indicated that it has crossed below zero, so it's been stretched negative enough where historically over 19 similar occasions in the past, so Toggle was able to find 19 previous occasions when this happened, the Costco price subsequently rallied almost 6% over the following 3 months. Now looking at the chart, you can see that starting with 354.77 as the entry price, the past paradigm would suggest within the confidence interval where you'd like to see the price to continue to track, the level you would expect would be around 375.26 over, again, within the next 3 months. It doesn't have to actually take 3 months. It's within this time window. However, if you see a drop below 344.52, this is the moment to revisit the thesis, and because you're pretty far enough outside of the confidence interval, the fair assumption is that this driver, the technical driver, isn't currently operating, and so something else is at play that might be pushing the stock lower. Now, always interesting to look is how many of these prior episodes have we had, and this is actually why this indicator is quite popular. You can see that it happens reasonably frequently. In fact, going all the way back to 2005, you've seen these episodes, and whilst you can't quite see it here, they have typically coincided with the lows in the stock. And so what we will do to verify this, we click here on the back test where the system shows you the actual returns after those 19 episodes. So what it basically does is it looks back through those episodes, it then looks at the trading windows around those episodes and effectively shows you the returns subsequent to that, again in similar occasions to today's. You can see that the risk reward is quite compelling. The upside is occasionally all the way up to 15%, whereas the downside seems to have been largely contained to below 5%. Again, also, as you typically would want to see, there is a nice shift in the distribution of the curve all the way here to the right, so the skew to positive returns is quite notable. And then finally, the P&L that you would have generated had you followed these insights every time in the past, so over the past 19 episodes, was quite steadily positive. Again, another encouraging sign. So much for Costco today. We, in the daily brief, which by now, to those of you who have subscribed, should already be in your mailboxes, we also discuss the recent abandonment of small caps by hedge fund. Check us out on toggle.global. Thanks.